We have with us, as always, Mr. Sanjiv Bhasin joining us on the show. Hi, Mr. Bhasin. Good morning. Good to be speaking with you. We're all discussing about the metal space. Over the last week, it has had a very solid run. But today, CLSA has gone ahead and downgraded the likes of JSW Steel as well as Tata Steel. Do you think they are a bit too conservative and early in downgrading, or do you think the rally has played out?
Yeah, good morning. So, Anisha, take a couple of weeks back where I've been telling you that the dollar is headed lower and the China comeback will see metals do well. We've seen that there has been no capacity addition. And I think the way nickel, copper, all both ferrous and non-ferrous are performing, this could be a very, very sweet time for metals, particularly commodities, particularly metals. And we remain extremely bullish on this space. So there will be upgrades, downgrades at new highs. Who thought Tata Steel will be 165 from 100 rupees in the last 6 months? And I think right now, sale is the new gale. So you can imagine the left out feeling. So we continue to be very optimistic. Our dark horse play there continues to be Nalco and Nalco, JSW and Vedanta. Vedanta has clearly outlined a reduction in debt through internal cash flows. And if you see the sum of businesses which they have, from Hindustan Zinc to Balco to anything to do with silver and Sisagor notwithstanding, they are in an extremely sweet spot as the going goes. I think Vedanta can clearly be a very big dark horse over here. So we are overweight this, and any decline should be used as an opportunity to buy. And as a disclosure, both Nalco, Sale, Vedanta, and Tata Steel are in our portfolio, and JSW are in our portfolio.
Right. Sanjeev, hi, good morning. Other than the steel names, tell us, given your prediction is that it's going to be a volatile March, what are the other stocks that you are keeping on your buy list?
Yeah, good morning, Aisha. Yes, you are reminding me every day as we go higher. But yes, that's where the caution lies. The Ides of March closer to 10th, 12th will be difficult, and there will be a much needed correction. Now, how long that stays, we don't know. But from such levels, you will see an inevitable correction as a lot of good news gets priced in. But right now, enjoy the party because there has been pessimism at its highest from the FIs, and now with GDP numbers and Nikkei hitting 40,000, I think equities are in a sweet spot. Plus, like I said, dollar and bonds are headed lower. Aisha, we are very optimistic on the oil marketing companies. And this is a permanent business which is going to stay. So HPBP at these levels after a sharp correction are very good buys. Our dark horse play is AU Bank. I think AU Bank can be a surprise candidate, and Bank Nifty is looking extremely poised to hit new highs. So AU Bank, given its pedigree in smaller states where they are expanding their credit franchise, and I think deposit franchise for them as a CASA ratio will start to see accretion much before the large cap plays. We also like Patanjali. Don't miss the rural play, which is coming back first in autos and now in consumer spending. I think Bata and Patanjali continue to be very, very good players with a 3 to 6 month view, which can generate very, very good alpha over a period of time.
Okay, let's see whether Patanjali creates that alpha or not. But what has been creating a bit of alpha of late is the pharma stocks, Mr. Bhasin. Aurobindo Pharma, Suven Pharma, they were locked in the circuit as well on Saturday, the 5% circuit on low volumes for what it was worth. But then there are positive news flow which are backing this. Aurobindo Pharma today has also positive note coming in from Phillip Capital, wherein they have raised the target price to 1400. And for Suven, that deal clearly got a thumbs up from the street. Are you tracking these two names closely?
Anisha, we've had Aurobindo from much lower levels, closer to 650, and it's been a stellar rise, particularly in the injectable markets. Right now, for us, two overweights are Ipca Lab and Biocon. We think these three, coupled with the large caps, Cipla and Dr. Reddy, they make a perfect combination. Lupin has been another one of our stellar plays all the way from 750, and we think the new, generic markets for them is now going to create even more space. So to sum it up, it will get confusing for most investors. The best thing to buy is the SBI Pharma Fund or the Nippon Pharma Fund, Mirai. These three have a good portfolio. They have a very active fund management team. And I think if you buy, from logistic or lab oriented to pharma, generic, if you buy a mutual fund, you'll be in a sweeter spot, which is tracking the whole gist of 8-10 sectors in the pharma space.
Mr. Bhasin, what should one do with respect to real estate right now?
So stay invested, but take some chips off the large caps like DLF and Godrej and buy India Bull Real Estate. As a disclosure, that has been our top pick from 85.90. It is just hit 120. Embassy arguably is the largest real estate executor. It can do 1 lakh crore of order book in the next 2 years. And now with this merger being given the red signal, given the green signal by middle of March, I think once Embassy has control over India Bull Real Estate, you can't get a better pedigree to play the the reality sector. As you are aware, the market cap of 6,000 against an inventory which is arguably the fourth largest in Maharashtra and Delhi and NCR region. I think India Bull Real Estate is a must-have in your portfolio. For us, that's the dark horse which we want to play on the real estate side, because the market cap is giving us sufficient amount of comfort for an upside.
Right. Okay, Sanjeev, great to have you on the show as always. Thanks for taking the time out.